Welcome, everybody. I'm Cantonese Cat. Hey, everybody, Cantonese Cat here. I'm going to go through exactly what I think about Marathon Digital Holdings Mara. I think it's going to the moon. I think a lot of times I show too much data and get people lost, and it's very difficult to kind of tell in terms of what I actually think. So I'm just going to go right off the bat and tell you what I actually think. I think Mara is going a lot higher from here. And I'm going to try to show you the data to try to back up my hypothesis. I could be wrong. There's a possibility that Mara had already topped, because you look at A-late wave theory. If you believe in the A-late wave theory, which I'm going to even talk a little bit about that too, trying to dispute some of the things that are out there, you can look at the last cycle. You can say, yeah, it went through a pretty classic 5-wave of A-late wave, where wave 3 is the biggest wave. Wave 1 is the one that just kind of got things started, where everybody's like in a disbelief. And then wave 2 kind of helped their confirmation bias. Wave 3 is really the one that really got everybody excited and got everybody saying, hey, you know what? Yeah, I mean, we're not going down from here, right? And then next thing you know, wave 4 and wave 5 is going to be like, kind of just get you as exit liquidity and trying to get you stuck with a bag and, go down from here. What if we've already gone through, and this is a bear case, right? We've already gone through the 5 ways. What if this already happened and this is wave 3 over here and we just gone through wave 5 and now everybody is like a bag holder right now? We've already gone through all this, right? I mean, the top's already in. It's just going to go downhill from here, a pretty brutal correction like it did over here. I don't think that's the case, because there's always a scenario which I personally favor. What if this whole thing right here is just wave 1 and we're going through wave 2 right now? And the biggest leg, which is the wave 3, still hasn't even started yet, and there might even be a wave 5 after that. Don't pay attention to the levels, like the targets over here. I'm just basically just trying to illustrate a point. Like I'm gonna go for a little bit of Fibonacci levels over here in a little bit to trying to tell where it's gonna go. But the point is, what if this whole thing is just like a wave 1 right here, and we're just going through wave 2, which has been a pretty brutal sideways chop here for the last 3 or 4 months. This is a 2-week chart of Mara, by the way. So, sideways here is really talking about like 3 or 4 months, which is exactly what we did. I'm going to tell you why I favor this theory, and I'm also going to tell you why I think that people have gotten A-late waves all wrong in terms of people who actually use A-late waves, as well as people who said that A-late waves are just, A-late wave theory is just like, a stick oil salesman just trying to sell you something that are not necessarily going to work. Which I actually think is a fair criticism, because if you use it for trading in a short time frame without cycle analysis and you're not understanding what the fundamentals of the underlying assets doing, and you also don't use any other indicators to try to back it up, yeah, absolutely it's a horrible idea to use A-late wave. It won't work. It's going to hurt you, because there's a lot of bias that can come with A-late waves, especially used at different time frames, to trying to fit your bias. It's an absolutely horrible thing to do. It's very subjective, but you want to use it in conjunction with everything else. A-late waves kind of more like a window to human psychology than anything. I'll kind of tell you a little bit as to why I'm going to use the Bollinger Bands to try to, with other underlying assets, they're cycle dependent, to try to tell you why I think that is. One criticism for A-late wave theory is that Ralph Nelson Elliott, which came up with the A-late wave theory, died poor. That's always something that everybody talks about. You have to put that into context here. So he did not end with a bang, but a whimper. Different Elliot, but hey, I'm just quoting it. But yes, he did die poor, but it's not because what he's saying doesn't really fit any merit, right? If anything, it's more of a look at human psychology. And again, you have to use it in conjunction with everything else, right? And it could be a supportive piece of evidence, but it shouldn't be the sole piece of evidence. Putting into context as to why Elliot died poor, the guy was like active around the time right before the Great Depression happened. Like it's the bulk of his theory wasn't even there really until after he became poor. So he lost a great fortune around the Great Depression, just like everybody else. And next thing you know, he got sick, and he continued to live for another like 20 years, just being sick, paying medical bills, and just never really recovered, because medical care is like absolutely terrible back in the 1930s and 1940s. They didn't even have antibiotics back then. And to criticize him for being poor, and that's the reason why Elliott wave doesn't work, is almost like saying that if you're such a great doctor back in like the 1930s and 1940s, why did you die of pneumonia? It's such an easily treatable condition. Well, they didn't really have like antibiotics until after World War II, right? And they didn't have Robinhood back then. They didn't have Schwab back then, where you can do commissionless free trading. To buy stocks actually is, not a very easy thing to do. Plus, the stock market wasn't even mature back in the days. Like, it was a complete wild west. But anyway, I digress. Why do I think Elliott wave works? Well, you have to think of it. The idea is not to try to confirm Elliott wave and say how great Elliott is, because he's not. I mean, he's just another guy, right? The thing is trying to use it to kind of think about what might happen and to see whether or not this is a reflection of potential human psychology, and trying to use it into current state of sentiment in the current part of the cycle, and trying to fit whether or not this is something that's happening or not. Usually, generally, what happens is on wave one, you just have a very, very brutal bear market. You have a rally over here. Everybody's going to be in disbelief. And next thing you know, everybody's going to end up getting confirmation bias over here, because you did have a big drop from wave one to wave two, right? Everybody's going to say, yeah, I was right. Like, this is just a bear market rally. It's just going to, keep going down from here. I'm so glad I didn't buy. And the next thing you know, wave three comes, and everybody, and wave three is generally like the longest and the biggest, and everybody look at it, it was like, okay, I believe now. Like, if I wasn't believing that this was a bull market, even though it's forming, higher highs and higher lows, I definitely believe it now, because it just keeps on going up and up. And I think right now, the risk is a lot lower now because I have confirmation. And next thing you know, everybody starts piling in, and you have a little bit of a wave forward, and realize, oh, it's just a normal correction, just like it was over here. And next thing you know, you go up again. Everybody already have flipped the bias from bearish to bullish, and that's when they're being used as exit liquidity. People who didn't really buy in from before end up buying in there, and you run out of buyers. The trend gets exhausted, whales leave, and you end up having a bunch of bag holders during the bear market. And I'm going to try to use other assets that are more relatable, that can kind of tell you in terms of what I mean by these kind of economic cycles. If you just look at IWM, I mean, most recent bull market basically go through the same thing. Like, you can use Elliott wave to draw what the human psychology was. From here all the way up to here, there's a lot of people who have great disbelief. Like, they really didn't think that the stock market is going to go up, and it still hasn't really hit its high. And sure enough, you have wave two kind of giving confirmation bias and saying, yeah, I'm glad that I didn't buy in, because like this whole thing right here is just a bear market rally. It's probably going to go make another low. And next thing you know, they don't buy, and the next thing you know, it goes make like these all-time highs, and everybody all of a sudden finally get convinced. And the next thing you know, they start to pile in. They're like, yeah, you know what? It's just kind of a little bit of flattening over here. Things are probably going to keep going up higher from now on. I think we're going to be okay, right? That's the entire 2021, that's the entire 2021 until 2022 comes. That's when you have big giant bear market, right? But you did make a little bit of a higher high right there, and that's when people really were trying to pile in over here. But the whales, the big money, the smart money, whatever you call it, they saw it coming. They knew that the bulk of the bull market has already happened. They already made a lot of money. Don't be greedy. These things go through cycles. Inflation's pretty high. The Fed's going to tighten. Let's exit. Leave these people back holders. Okay. So they exit around here between wave 4 and wave 5, and next thing you know, people kept on piling in because they confirmed this is a bull market, right? You remember the positive sentiment throughout the entire 2021, and people thought 2022 is just going to be another great year. But yeah, according to Elliott wave theory, I mean, this makes perfect sense when it comes to human psychology. Next thing you know, bam, it goes a lot lower, right? Has this phenomenon happened in the past? The answer is yes, right? I mean, you look at IWM, which is the small caps. These are very, very sensitive to economic cycle. You can draw Elliott waves all around here for each one of these cycles, right? 1, 2, 3, 4, 5, sure, right? That's one cycle right there. Can I draw another one right here? Sure. 1, 2, 3, 4, 5, right? So you can keep drawing these things. You can keep drawing Elliott waves, and it really fits the human psychology in terms of what's happening. And roughly, these cycles are around the same length, usually around like 2 or 3 years or so in terms of the bull market. And it kind of gives you an idea in terms of what we might be facing right now. Now, if you look at the Elliott wave, like we just had the bottoming right here, this could be wave 1 right here, right? And we can be finding wave 2 and try to figure out where wave 2 goes. Wave 3 is probably going to make an all-time high. And then everybody's going to get very euphoric. Everybody's going to buy on wave 4 and then become exit liquidity for wave 5, right? So that's generally what happens with these, psychoanalysis. If you look at Bitcoin, it's the same thing. It always go through a pretty reliable cycle over here, and actually the timing of IWM and the Bitcoin cycle are quite matched together, which tells me, hey, maybe these are just one big giant liquidity cycle that is being reflected. Maybe it doesn't even really have much to do with halving at all, right? So you can keep drawing these things. Like I can keep drawing, and they basically have like this 5 wave mythology look to them, right? I mean that's kind of how cycles go, right? From cycle low to all these things. Basically, you have like these 5 wave theories looking, and you can kind of extrapolate in terms of where you think things are, right? There is a possibility, and again, Mara fits this whole 5 wave form back in the last cycle during the bull market, right? The question is more like, where are we at right now? Question is going to be, are we at the very top of this cycle already? Is this cycle going to just end and we're just going to go down from here? I don't think so. Like, a couple of reasons as to why I think that's the case. First of all, the very first thing is just sentiment. I mean, right now the sentiment is actually not that great. There's some people who actually question whether or not global liquidity has stopped. There's always constant talks about recession, like unemployment recession is coming. There's still a lot of talk when it comes to inflation, and also there's a lot of talks about both could be happening, where you get a stagflation type scenario. Because of all of these different fears that are being spread right now, I actually think that if anything, based on human psychology, I think we might just be ending wave one, and we're just this whole thing right there just be wave two, because there's just so much disbelief right now. People are just not convinced that this can go up any further. So first of all, I'm not entirely sure what the thought is that people are certain that a recession is going to come and it could come soon within the next year or two. I don't think anybody really knows that. You can avoid having a recession if you're able to have increased global liquidity. You can able to pump money into the system. There are a couple of things that are happening right now to pump money into the system. One is the government wouldn't stop spending. Two is they most likely have to lower rates again because the government debt just is not sustainable with the rates being so high. They're going to find any excuse they can to try to lower rates and to increase, liquidity in the system because they want to spend, because they want to win elections, and because they want to try to print money whenever they can. Whenever inflation starts to even start to go down, or there's any hint for it to go down, they're going to try to print money as much as they can, right? You also have China, which is trying to print their way out of the Great Depression. There's a lot of Chinese stocks that look like they have a bottoming type formation, and you can tell that the Chinese has really been trying to increase liquidity into the system, which is also going to affect Bitcoin, which is going to affect the U.S. stock market, small caps in the U.S. stock market, and in turn, stocks like Marathon is probably going to thrive very well. If you have any doubts about whether or not the U.S. Liquidity is increasing, there is something you can look at, which is the M2 money supply. And what you're really seeing here is we had pretty brutal quantitative tightening, and this looks just like the small caps, by the way. This looks also just like the marathon chart, by the way. You started to have a little bit of uptake of global liquidity, and it also started to have a little bit of uptake of U.S. money supply, right? You can tell that like this is objective and this is happening. It's forming a little bit of a higher low, sorry, higher high, higher low, and right now it's trying to form a higher high right here, right? So there's a trend change right here that you can see. If I just pull up the monthly Ichimoku cloud, like this is a very, very interesting phenomenon. You can go back all the way back in history. This thing always stays above the Ichimoku cloud on the monthly. During bad times when there's some quantitative tightening, you can get closer to the cloud, but it never really quite touches it and just keeps going up here for like 2 decades, right? Like these things just keeps happening. It's never really gone down. Of course, it's never gone down because they're always going to keep printing money. This is always going to be the case. They're just not going to all of a sudden just one day just stop printing money, right? So basically, what happened is, yeah, we print too much money way too far, way too fast, and we're just basically having a little bit of correction. And now we're resuming the trend of no longer having any kind of quantitative tightening anymore, objectively. QT is done. I mean, like this is I don't think there's any question in my mind at all that QT is done, right? If you look at other things, if you worry about inflation coming back, like that's always a fear that people might have. But the fear, whether or not it's justifiable, I'm not sure. Like, 'cause if you look at oil, and if you do, let me see, like, yeah, if I do a 2 week chart over here, it's pretty clear in terms of what it's trying to do. It broke down underneath the Ichimoku cloud on the 2 week chart, and it tried to, break above and got rejected by the top of the cloud, and then it went down. Right now, it tried to break back above and getting rejected over here by the bottom of the cloud, right? It looks like it had, two big candles here for like a whole month, which is kind of going down. Everybody have a lot of recency bias in terms of what oil did all the way from 2020 up to like, June 2022. Everybody's scared about inflation, and everybody's also scared about this recent, 4 months straight up of oil. But everybody forget that oil actually looks like it's very very weak. It's looking very very exhausted. It's getting rejected and rejected after breaking down a very important support level. And yeah, I'm just not sure about that. Looking at the U.S. dollar, it's also very similar. It formed a little bit of a tweezer top over here, and it's basically trying to break above the cloud. Once and twice already. It looks like it's not really able to do that. Again, like the U.S. dollar also start to look pretty weak, right? So, so I'm also not sure about the inflation narrative either. If you look at the U.S. CPI index, sorry, I is index. I'm kind of a little bit redundant here. If you look at the CPI, what you can see is that it's really started to decelerate. Like you can tell the trend. I'm not making this up. We're gonna turn off the Ichimoku cloud here, but you can look at the trend. Like it went up significantly. We all knew that, right? Because they're printing money like crazy. But with quantitative tightening, it really starts to kind of flatten out. Right now, it's flattened out to the same trajectory like you've had really throughout the entire last couple of decades, right? It's not like how it was. It just keeps on going up and up and up. Right now, you're seeing like maybe a little bit of flattening. Could it end up being like this? Potentially. But you also have to take into consideration that over here, a lot of things that happen, like Vietnam, oil production crisis, and also China hasn't really even like existed as an economic force to pump out cheap goods to help with deflation, right? So a lot of things have happened to really try to flatten out the curve. In great thanks actually to China, like and right now the curve went up a little bit because of COVID, because they print money like crazy to avoid a great economic depression, and they print enough money, but really it's started to just kind of decelerate right now, and it's going back to your normal trajectory like you normally would expect. So I'm not really too honestly too concerned about inflation being that big of a problem moving forward, unless if there's any kind of like black swan event, which I don't think anybody can really truly predict, right? That's by definition the black swan. Now going back to the chart for Mara, because I really did just go 180 to talk about everything else. Going back to the chart of Mara, do I think that this is the top? Probably not. I think that this is gonna be potentially either wave one, or you can argue that this might be wave three. I could buy that, and I'm gonna kind of show you some of the other things. But first of all, I think the sentiment makes it feel like this is really more of wave one, because there's a lot of disbelief. I don't think people even really truly believe that Mars is going to go up to the moon. Like there's a lot of criticism for it, and that's completely fair because a lot of people have recency bias about what happened over here, and they also argue that money, the Fed's not going to print money like it did over here, which is also a fair point too. Except that they forgot that Marathon has a very small market cap, it's just like a few $1 billion. It doesn't take a whole lot of liquidity to like pump it up to the moon, and you get into Marathon, it's also essentially like a leverage play for small cap stocks and on Bitcoin. So if there's a little bit of increase in global liquidity, it can get reflected in Marathon pretty strongly. It's pretty interesting to look at this. This looks just like that M2 money supply chart, doesn't it? Like it's starting to form a little bit of a higher high, higher low, and higher high, right? This looks like wave one to me. This looks like what it did over here. Couple of reasons why I don't think that this whole thing right here is wave five of like the entire cycle is because if you look over here, wave five over here, people are trying to use it as exit liquidity. Like the buying pressure really wasn't there anymore, and it reflected down here the volume. Like there really wasn't that much volume over here anymore. Wave one is strong, right? And then wave three is even stronger. Like the volume is very very impressive, right? But wave five, the volume is just not really there. And this is just kind of how exactly the morphology of what human psychology is showing you, right? So looking at here, like this could either be wave one, they can argue this being wave three, although wave three should be longer, technically. Like this whole thing right there has increased volume throughout the entire thing, right? Is this right, like little tiny thing right there, wave five? You can argue that, but I don't think so, right? You can argue this being wave five, but there's a huge increase in volume right there, right? So it just doesn't really make a whole lot of sense for that to be the case. I would expect if wave five has happened, then the cell volume, you know, and the big buy volume over here, I'm just not sure. I think this fits the morphology of more of like a wave one kind of thing, or you can even argue that based on volume can fit the morphology of like a wave three kind of thing, but certainly doesn't really fit wave five. Right? That's one knock against it. The other knock against it is if you just look at, I'm going to switch over to the monthly chart. And the whole idea about why I think Elliott wave actually makes sense based on human psychology is this: if you put the Bollinger Band, and if you put a Bollinger Band, if you just look at the other stuff, like I'm going to show you back over to the small caps, right? IWM, right? I'm going to get rid of all this crap right here. None of that really matters because you can just look at it with your eyes and you can try to infer in terms of what it is that I'm trying to say, right? Usually what happens during a cycle is this. The Bollinger Band hasn't expanded yet. Like price have just kind of corrected and gone sideways. It went down pretty significantly, right? And it kind of went sideways for quite some time. The Bollinger Band squeezes. When the Bollinger Band doesn't squeeze, you're putting a lot of restriction in terms of how fast the price can go up or down. You're going to have these kind of Bollinger Bands are going to serve as more of like a resistance or support, right? So you're going to have a hard time if you're trying to push up or down. It does require some time and some positive energy to really try to expand the Bollinger Band up, right? So usually what happens typically during a wave is that wave one is just going to be like this thing that they're, oh, okay, bear market ended, we have the bottom, and then we have some, up forces over here. But the up forces are so that, it's just starting to build up a little bit of a bull trend, turn the 20-month moving average from downwards or from, being exhausted to flat to positive sloping again. Like that's really the beginning of, the bull cycle is just trying to reverse some of the technical damage. People are still not going to believe, but for those people who believe in the economic cycle and take advantage of it, they're already in at this point. Once they start seeing like a little bit of higher high and higher low, like they're already in at this point, right? They anticipate that wave three is going to come, but it's not going to be able to just push all the way up yet, quite just yet, because the Bollinger Band still hasn't expanded. Usually what happens with wave three is that you're really starting to get a big Bollinger Band expansion to happen to allow price to go up a lot higher over time, right? And that does require some very impulsive price action. Like over here, you see this big giant gap up, right? And over here, you see this big giant green candle going up like that, right? You really require, like, the same thing here, like big giant green candle up there like that, right? And that's really the start of wave three. Is usually why the reason is strongest is because it's ready to go up, and it needs to kind of have something kind of pretty impulsive price action to really try to expand Bollinger Band a little bit to allow price to go up higher, and that's generally what wave three does. Right? This is another example of wave three right here. This example can be more easily illustrated with Bitcoin because Bitcoin is just also very very cycle dependent, and when it goes parabolic, it goes parabolic. It truly like just completely expands the Bollinger Band. All the bottom of the lower Bollinger Band just gets expanded all the way down to the floor, right? Same thing with Nvidia. Like if you look at Nvidia chart, it's the same thing. You can see that from wave one, you're just like, I have a little bit of squeeze right here. There's a lot of disbelief. The Bollinger Band is not really quite expanded yet, but it's starting to have a little bit of a bull trend over here, right? When wave three starts, that's when you have like a very very impulsive push up. And you're really trying to expand the Bollinger Band up to allow it to go up a lot further, right? And then when wave five comes, like it's when things like you really just went way too far above, like it closed above the Bollinger Band for like five months in a row, and really is starting to get very very exhausted, and that's when you have a little bit of like an end to it with a wave five. Same thing over here, right? Now, during this process, wave three is what really pushes the Bollinger Band, it expands the Bollinger Band, and then when wave five comes is really when things really start to get a little bit exhausted, right? Same thing over here, you have a very similar morphology here. Wave one, and then wave three is really what expanded Bollinger Band again, and then wave five is a little bit of an exhaustive kind of trend, right? You're going to keep on having this over and over again. This is what cycles do, right? It's going to have a little bit of a disbelief over here, forming a little bit of higher high, higher lows. And then when people are in, you might end up having a little bit more, pretty significant correction over here. And then you end up having the wave three, which is going to end up really pushing Bollinger Band up and down to allow this parabolic move up, right? And then wave five is when things really try to get exhausted over here. So I think we might be getting close to, really having like that bulk of wave three to come, but I don't think that has really arrived quite just yet. And this is kind of how I view Mara, because if you also look at the Bollinger Band, it's just kind of gotten a little bit squeezy over here. Like this wave one is trying to expand the Bollinger Band up again to get ready for potential wave three that could come for a very long time, and it can be quite powerful. And right now, this whole idea looks, this whole thing right here looks more like a wave one, kind of like how it did over here. Wave one over here did the job, right? It flattened out the 20-month moving average, and it got the technicals ready for you to have a potential impulsive green candle to really try to push the Bollinger Band up and down, allowing price to go up a lot higher, right? I think we might be getting a pretty decent setup over here that's looking very, very similar over here. And we have a little bit of initial expansion, a little bit initial contraction over here too, because of wave one and wave two, right? Wave one expansion, wave two a little bit of contraction, but there's a potential that wave three hasn't even come yet, and this whole thing might just be kind of setting up for something that could be potentially very bullish moving forward. That's kind of what when I see this, is kind of the look of it, right? The other thing is you look at the whale inflow, you can see very similar morphology over here, right? You start to have some increase in whale inflow over here for a few months, even though the price went sideways after wave one, right? This seems like whales are trying to enter in around here, right? Before they pump up the whole thing, and then before they exit, right? You have a very, very similar morphology over here. Like this whole thing actually looks more like a wave one kind of thing, just like this whole thing here looks like a wave one kind of thing. Although this wave one just lasted a lot longer than the wave one over here before, right? In terms of why that is, maybe because of COVID. Maybe if COVID didn't exist, maybe the wave one would be a lot longer, right? That's always a possibility. But right now I see this morphology here based on Bollinger Band and also based on the whale fund inflow. They look very similar, both of which are suggesting that we're at wave one. Ichimoku cloud, if I'm going to pull up the conversion and baseline back over, you have the conversion, which is the Tenkan, and the baseline, which is the Kijun. You had a bullish cross over here. You also had a bullish cross over here. Usually when these bullish crosses over here happen, they generally signify that, hey, wave one is done. We might have a little bit of wave two correction, but then wave three could be coming soon, right? That's basically what it's telling me, right? Again, if you pull up the same kind of thing, if you look at these other cycle dependent thing, we just had a bullish cross over here for the Tengen and Kijun here on IWM. You also have another bullish cross over here, right? All these are signifying that wave one has ended, and wave three could be coming soon, right? You have another bullish cross over here, right? And then over here you have another bullish cross over here, right? These crosses generally happen when wave one ends and wave two happens, and you have a little bit of a correction sideways before the next parabolic move to come up. And that's kind of what I'm seeing across multiple indicators, across volume, across Bollinger Band, across the wealth fund flow indicator, and across the Tenkan Kijun cross of the Ichimoku cloud, right? The bullish TK cross, or the monthly. And I can show you the same thing for Bitcoin, but I'm not going to, as it's redundant. That's also the big part of the reason why I think that we might just be beginning, we might just be getting set up for, with potential very powerful wave three coming. When is that going to come? I don't know. Could it come this month? Could it come next month? Could it come the month after that? I don't know. All I know is that a lot of energy is being built up over here, and the setup over here, this looks, if anything, just looks like wave one than anything. Obviously, nothing is for certain, right? There's always going to be black swan events. There's always going to be some other things that come and kind of throw us off. And what I think doesn't matter, because what I think is just what I think. What I think is not the fact. The fact, nobody knows. But I'm here to show you why my money is in it. I'm here to show you why I made the post back in January 2024 to tell you that I'm accumulating miners over the next few months, and I've been doing that, and that's the rationale as to why I think that is the case. So far, I'm not seeing anything in the technicals that's really telling me that that's not the case, right? And in the event, if you're wondering how far Mara can go based on psychoanalysis, I can say that I think you can look at it based on Fibonacci analysis. And these Fibonacci analysis, they're just a guideline, right? Like they're not a goal. Like the last cycle, how far did it go up? The last cycle went up if you count this as like the high over here from the previous cycle, which is not really fair because I don't think Mara is really like a true miner back then. But it did hit the 1.618, right? So if you're talking about potentially hit the 1.618 Fibonacci level from the cycle high to the cycle bottom, you're really talking about maybe like $133, right? What if this cycle actually went up higher than the last cycle? What if actually can hit like some of these crazy targets up here, like 2.618? You're talking about like $200 right here. A lot of people think that these targets are crazy, but the price also went from like $3 over to like $33, just in the span of about a year. So I don't know why it would be such a surprise if it ended up going from like $33 and just going to like 200 by the time like maybe a year and a half from now. I think it's not out of the question, especially if this is just a test run to try to get the technicals to be a little bit more bullish. Especially when you look at the U.S., the M2 money supply is just starting to kind of tick up a little bit, and it's forming a little bit of a bull trend. If money keeps on coming in, it doesn't take a whole lot to really pump the stock, right? So I do think that there's, and also look at how well like it's been respecting these kind of Fibonacci levels up here. We got rejected at 0.382, and down here it gets supported by 0.136, right? So there's always a possibility that it could hit the golden ratio 1.618. It can even go a little bit further depending on how bullish it goes, right? And a lot of people say, oh, Bitcoin hits like 200,000. I can see it potentially hitting like 83 based on ratio, but it's not necessarily the case. I mean, right down here to right up here, like Bitcoin didn't go like 40x. It did not do that, but Mara went like 40x from like the lows down here from like $2 over to like $80. Do I think like Mars can go 40x from like where we're at right now from like 16 to like, I don't even know, like 16 times 40 is something ridiculous number. Like, do I think it's going to go like above the 4.236 level to go a lot higher? No, like I don't think so, right? But I do think there's a possibility if people could be missing this, is that it could go up to the 1.618 level, which I think is entirely possible. I'm not saying that it will happen. I'm just saying it's entirely possible. There's a little possibility that it could just end up hitting the previous all-time high because of dilution. There's always that possibility, right? And there's always a possibility it could go higher. It depends on how irrational the bull market end up being. I just wanted to kind of share with you some of these thoughts, and I would look at how things would go before I end up taking profit along the way, right? And people saying Mars definitely going to go here, Mars definitely going to go that. Nobody knows. Like this is something that you can speculate on, but nobody knows. This is the general guideline that I look at. I want to see if wave 3, if this is indeed wave 1 over here, and if wave 3 ends up starting, I want to see how far it goes. I want to see whether or not there's any trend exhaustion. I want to see how many candles close outside the upper Bollinger Band, and really gets me to kind of get very, very concerning about the trend maybe getting exhausted before I even consider these targets. Like that's kind of the way I'm looking at it. I do want to kind of get a few things off my chest. First off is I think a lot of people are giving technical analysis a bad name, especially those like not very smart people that go on CNBC and keep talking about, oh, the price fell below the 200-day moving average and it's bearish now. It doesn't mean anything. It's completely meaningless without having context, without thinking about cycles, You're just basically like looking at something that's simple to look at and trying to make a case to kind of fit your fear bias. You kind of basically look at one indicator and basically telling everybody, oh, that indicator does that indicator does that. It doesn't work that way, right? I also hate the fact that like a lot of people just end up just drawing lines and thinking that things are gonna fit the lines. It doesn't always have to fit lines. It's nice when it does. It's just one of those things that you can look at. Oh, like looks like there's a trend line that's being broken. Okay, that's great, but it doesn't necessarily have to fit these lines that you're drawing. Like it's not that simple. People who believe in technical analysis and do bad technical analysis are giving people bad names, and then people also don't believe in technical analysis and they cite people who do bad technical analysis, tell you why technical analysis doesn't work, also not very smart. And it absolutely terrifies me when I like watch CNBC and read and look at like the so-called chart masters do like these very terrible charting. It absolutely terrifies me. The whole point of technical analysis is this: it's not trying to draw lines, not trying to figure out, hey, because of these indicators, this is going to happen. It's not about that. It's about we're trying to sniff out what big money is doing. It's under the assumption that the big money, the smart money, know what they're doing and that they know what's behind the scene. They have a lot more insider information than we do. And we're trying to look and see what they're trying to do because they generally move ahead of the curve, right? They generally try to put their money in already during wave one, wave two, and they are trying to gonna let other people pump the stocks for them or pump the cryptos for them. The whole idea is to try to sniff out and see what they do. And for technical analysis, we are more just trying to see the trend because of that, because we're trying to see what the big money is doing. We're also looking at volume because we're trying to figure out what the big money is doing, right? Sometimes big money don't get it right. Like the technical analysis could be wrong, potentially because of two things. Sometimes big money don't get it right. Like they can be wrong. And if you're sniffing out what they're doing and following what they're doing, you're wrong, right? Sometimes they could be misread. Sometimes it looks like they might be doing one thing, but they're tricking you. They're not really doing that. But I mean, I've like to say that happens, but they're not, very, very often. Um, I also want to have a rebuttal about how technical analysis is astrology. You have a lot of terrible astronomers. Sure. You have a lot of people that just look at stars and say, oh, it's because of this, it's because of that. And then you also have great astronomers like the Mayans who come up with these very precise calendars. And you also have one of the greatest astronomer ever who goes by the name Galileo, who found out that the Earth is not flat. And there are still people who right now believe that the Earth is flat. So I am just gonna get that off my chest. If you're a flat earther, I'm sorry if I offended you. If you don't believe that the US have ridden a space shuttle and landed on the moon, I apologize. Okay. Anyway, I'm done talking. Mara, I think, is going to the moon. And I just kind of show you why, and I went along about ready to do it. But I just wanted to show you my rationale. Have a good one. Bye.